Hey, what's good, family? It's your boy MC Fire.
An ice cube.
Hey guys, we're coming at you with another Fireside Trade Chats, trying to break down some of these. Um, we got some of these picks, potential trades that we're looking at, some tickers, and a couple other nuggets for you guys. So definitely tap in. I got Q here today, so
Yep.
she's gonna represent how a lot of people are. Is if you know she has some questions, we're going to try to break that down. So good news. The market overall today kind of took a little bit of a bounce. I know over the last couple of days, it's been down. Actually, basically the week has been down almost every day. Following the Fed chair's news that he doesn't look like he wants to cut rates. So if you're the kind of person who is looking at it like waiting for a catalyst for a sell, that was your catalyst. And with the right sell trigger, you definitely could have capitalized that on Monday, for sure. Last Monday, that is. This Monday, though, we did see a bounce in our predictive vantage point model, which it kind of uses AI to generate a predictive um, high and low, so to speak, with an 86% accuracy rate based off 150 input points of various degrees that comprise of whatever you're looking at, whether it's SPY, Q, an ETF. It's bringing in 150 points, whereas most people, when you're looking at it yourself, you may be bringing in maybe 3 points, whether it's above a moving average, inside a rotational zone, like high, low level, support resistance, whatever you like to call it, and maybe some news. Those are three inputs, whereas the Vantage Point model is bringing 150 inputs. So, how other markets correlate, maybe the data for some forex, and how it brings it all in to generate a high and low. Potentially, that high and low is saying, hey, there's more buying pressure on the market than selling pressure. So, doesn't necessarily mean that the market will go up. It's just saying with a high degree of certainty, 86%, that tomorrow should be a buy day. So let's dive right in. Now we have pulled up for you guys a daily chart of the Qs, but let's go. I like to start kind of on the weekly, so let's start there. Kind of just get a big picture. Bad might not seem bad enough, but when you see this giant candle, it looks really bad, right? Now I did find support here, and just like we explained in some of the um, other videos, these high and low levels basically are rotational levels, and the market, if it's in the middle, it will do one of two things. It will probably test the high or test the low. Just like I think we explained in the previous video, because it basically rested on the line, it's only two courses of action that we saw was it's going to test fair value or go down to test fair value. We had an alert for both, but my thinking was because it was an uptrend and it found support, it would like to test fair value here. If it can continue going up, it might test highs, which it did today. It did test high, but settled at fair value. So it basically just went rotational. That's pretty good because what we predicted, based off market theory, right? We're not wizards, was accurate. After it came down here, it could do one of two things. It would test fair value of this rotational level or test fair value of that rotational level. And it did that. So now we're kind of in the middle. Our next guess potentially is, will you come up and test market highs, or will you come down and test market rotational lows here? That's kind of what we're thinking, right? So there's the assessment for the Qs. And if you watch a previous video, I believe this is where I broke down. It has only really, the market only has really three plays. It can go up, down, or sideways. So then it went down. It can go up to fair value or down to fair value or stay sideways at the line, right? Doesn't do that. We call that a squeeze. The market doesn't necessarily stay in squeezes for long. And when it comes out of squeezes, because of the low volatility, things are cheap, especially options. So staying cheap is good for you, but great when it comes out of that low volatility environment to a high volatility environment. What we got for you today is NVO. We have NVO lined up because it is showing a pretty clear buy trigger or a potential buy trigger on the weekly. And this is why I kind of like to look at the weekly. NVO has been, Novo Nordisk has been in a very defined, aggressive uptrend. They had a new weight loss product, Ozempic, come out. It's been absolutely a game changer for a lot of people. Luckily, we don't have to worry about that. You know, not on the heavier side, but if you do, they got it out there. Awesome, good for you guys, right? We like the gym personally. But what's crazy is on the weekly, we got what we have a buy trigger in a defined uptrend, and actually in a very strong uptrend, right? It's been above its 1 ATR for a very, very long time, multiple months, going parabolic in some cases here and even here. And then it's slowly been dropping, almost like a very large bull flag. So you can almost consider this as a pennant bull flag, which is a bullish pattern. Very, very bullish pattern, actually, if you get a bull flag. So potentially a buy trigger if it breaks week's high and it's already crossed above the 8-period moving average. If it breaks previous week's high, you would consider that a pretty clean buy trigger. We have that. Unbalanced volume down here is green, and the trend is currently poised to kind of push up. And the reason why I say that, I'm gonna widen this out a little bit. These lines, I know we haven't gone over these lines, but short term, the yellow line is 2 standard deviations short term and 2 standard deviations long term, right? So 2 standard deviations short term is kind of where it's at. And if we're looking potentially on a weekly chart for a reversal, if it's been in a long-term uptrend, and you got a short-term 2 standard deviations, that could be very powerful for a continuation to the upside, right? Especially after a nice, juicy bull pennant flag that it's formed, right? Very bullish pattern, so we like that. Q, does that make sense? Do you have any questions on that, or seems pretty straightforward?
So we expect for this to go up, continue going up.
Yeah. Very, very good. Yeah, exactly. Go up based off of a trigger. Now, we don't know what the market's going to do as a 50-50 chance of going up as it does going down. But they say the trend is your friend. 2 things I want you to note, right? As it comes into this rotational zone, it doesn't stay in there for long. So if it comes into the zone, right, and it's inside, this white line becomes its what? If it comes into it, it becomes its ceiling, right? It becomes its resistance, right? And this is its support. But now that it peekabooed back above it, this line becomes its what? Support. Very good. It becomes its support. So if it breaks below and comes back above, and actually tested it, we can go take a look at how that actually happened. Today, it actually broke above pretty high and then came back down and kind of, I believe it's testing this line. If it continues back to the upside, that would be a pretty strong buy trigger, right? It could potentially break the day's high and then continue to the upside. So,
and is this something that you want to do options on, or do you want to kind of invest in it since it has been on a rise for quite some months?
It's a great question. And for you guys at home, this is by no means any financial advice, but I would say this is definitely a play for options. And let me explain why. Novo Nordisk, unless you have multiple millions or multiple billions, being able to leverage at 125, right? A lot of people, that might be a strain on your financial account. Let's say if you have only like $5,000 to $100,000, being able to leverage more than 100 shares would cost you a significant amount of capital to your account. So unless you're willing to take a very large position with a small account, options would be your best options. You can control a large amount of stock for a small amount of capital. We can kind of see that if we go to the trade tab. Now you guys can't see this. I'll probably bring it over. But the trade tab for Novo Nordisk says, like, to end the weekly options, like to go 3 days out for a potential call option is about $129. Now, granted, this is after hours. So that could change, but at the money call option is about $129. That is to control for 3 days 100 shares of this stock, right? We would ideally want to get it for 3 weeks. Expiration 17th of May. That's about 24 days, right? And you can control 100 shares of Novo Nordisk for $450, as opposed to the, you know, $12,000 that you would have to secure. So that is kind of, if you just want to capitalize on that move, maybe get some profits and then roll your option if it goes your direction. That is a strategy. You can use the profits to continue in that uptrend, and we can break that down probably in a later video. But just for a call option, to answer your question, it'd be 450. And then what we like to do is we like to do debit spreads there. And the debit spread would be a 50-20. So if you see here, this column is delta. The delta at the money is 0.51, which is basically, 51 delta, we call it. And then we would buy the 51 delta for the price of $4.50 or $400 and $450. And we would sell the 20 delta, in our case, the 0.19 delta, which is $1.27 or $127, right? Roughly, that would translate to a little over $300, right? That way, we have, it's basically the same amount of capital invested, but we have some hedge against time decay because we're selling an option. Not a big hedge, but enough hedge, right? Enough hedge for time decay. And in 3 weeks, what you can almost see that is, this is like a, I would say, percentage.
And we are aware that you can't see the screen that he's talking about.
Yeah. Currently. So just take my word for it. Basically, if you want to look up the options chart on Thinkorswim, the delta, you can put a column in your trade tab, and that's what we're looking at. We're looking at the delta at a 50 versus a 20. So there it is. Does that make sense? Mm-hmm. Pretty straightforward. Awesome. Okay. Now, another play that we are definitely checking out is the good old Amazon. We love Amazon, right? It brings us our packages and it makes us a lot of money. Also, kind of same thing here. The trade, what we're looking at is still bottom left, top right. Bottom left, top right, but in a short term kind of negative capacity and potentially a buy trigger. Even in this sense, right? You'll see it comes down, it tests this rotational level, and it finds itself in the middle, right? It can do one of two things. It can come to the middle, or it can test fair value in the middle as it approaches low. So that's kind of how I'd like to think of it. Some people like to say, oh, it can go from rotational high to rotational low. That's not necessarily the case. Just break it down into its subdivisions. It can go to the middle or to the middle. Mm-hmm. And once in the middle, it can go test a high or test a low. It could get rejected. Very similar to this right here. It rotated high and rotated low, right? Mm-hmm. But there was some points where it just opened kind of in the middle and then broke, right? Mm-hmm. Or might open in the middle and then test the low. So it doesn't always have to complete the rotation. It could stop in the middle. That's very, very important when you're talking about trading daily. So if Amazon gives us a buy trigger, meaning breaks which has been established as the week's high, we're hoping that it continues to go on and break this rotational level. We'll actually put an alert there because if it breaks, this is kind of an aggressive buy because you could get rejected here. But if it goes on to test this level, I would want to watch it. And if it breaks that level, I would want to buy, right? We also have XLF. So I will pull it up for you guys, but I want to pull up something else to show you guys why we got tipped off to XLF in the first place. And I'll drag this over to you guys. Cool. We'll get rid of the ad here and I'll bring it right over. Bear with me. Boom. So we have a chart here of
Right.
very, very bright. Yeah, it's definitely a difference, right? We had a chart here, and what we noticed off the rip was the color marker for financials was purple, right? But the color marker for everything at the highs was communication services and infotech, right? Basically your XLC and your XLF. Those were already peaked. Now, when we saw this giant drop off, the first thing to show sign of life, believe it or not, was the purple, which was really financials. And then some other things started peaking with the rest of the market. But financials started showing signs of life back here. Well, other things were just barely starting to peak forward. I think the blue utilities also showed signs of life back here in the lows for some rotation. So this what I'm helping you do is identify sector rotation. Where where is sector rotation happening? This is a free chart, and you can literally just go to www.barcharts.com, or you can just type in this URL. This will pop up. It refreshes like every day. It is free.
You
So
can type in what?
www.barchart.com.
And you said something CRL. What's that?
The URL.
URL.
Yeah. So like basically the address for them to find this exact chart is slash stock slash market dash performance.
Got it.
Yep. And if anybody wants that, we can definitely shoot you that URL, or we might even attach it below. Right. So here we saw that financials or XLF was on the rise. So in doing our market research, right, we're gonna go take a look at that XLF here to be like, hey, and here you go. You have a so if you watch one of the previous videos, I think we went over like if it breaks this level, we did put an alert here. It did give us a buy trigger, and we're watching it. Kind of same theme here. Uptrend, nice little pull back to previous resistance level, and then after it did, broke the 8 period moving average, broke last week's high, and as you notice, just like what I was saying about Amazon, it broke, but it came back and retested this, and let's look at the daily, right? It broke through this level and actually came back and retested. So that's what I was talking about, that hazard zone. Same thing for Amazon. Yeah, you might want to wait for it to break that resistance level and make this your new support for possible continuation. Okay, that's very, very crucial because that's what can happen. So we have XLE, and that will be what we're going to cover here too. Oh, one more thing on this one. If you are looking to, I might have to actually pull up the other chart to show you, but inside Thinkorswim, I'm going to pull this up here just for you guys because I love you so much. Bear with me here. We have, where is it? There, boom. Okay, cool. I'll pull it up just for you guys. So XLF is here, and we're gonna go to fundamentals. What I'm trying to do is show you, if let's say for example you don't know what's in XLF, right? You don't know what's actually in the what's in the breakdown of XLF. Maybe you don't want to trade the ETF. Maybe you want to take some of the tickers, right? You will go up to market watch, analyze. There you go, and you go to fundamentals. And inside fundamentals of XLF, it'll give you the top 20 or almost all of the holdings that it has. You can expand it, get 30 more holdings, get a whole bunch. I wouldn't worry about all of those because they're basically like maybe less than 1% of the holdings. But the top 10 definitely is something you could pull up. So in XLF, I would definitely be watching. I'll pull back this guy back up for you, right? Is in the top 10 holdings, yeah, let's look at JP Morgan real quick. JP Morgan Chase. Right? It's also doing that a little bit more aggressive, kind of broke that level already and is already starting to move. You have, oh, go back. Might need to boom. Go back to that and then unlink it real quick so I can do this thing majiggy. We have Visa, not to be confused with the Visa. Now this right here is not necessarily showing a buy trigger, so this could be weighting this down. So it might be, so the reason why I'm showing this is, let's say for example you don't want to take XLF and you're like, hey, there's stuff in there, it's like a 50-50. We can go to MasterCard, right? MA, no buy trigger on MA. It's heavily weighted. BAC, Bank of America, right? It's moving up right considerably. So out of the outperformers, you might say, well, I might want to forget about XLF and maybe go with one of the individuals inside of the XLF, JP Morgan Chase or Bank of America, and say, let the laggers behind Verizon or MasterCard, right? You got Wells Fargo, and this will be the last one we'll look at, WFC from the XLF, right? Another outperformer, right? So it got its buy trigger a while ago, right? Came in, played around inside the 8 period moving average. After it went above this rotational level, we can put it, kind of show you what I'm talking about. Once it kind of went above there, it kind of became like, this is your new support and it's gonna run. So just something to think about when you're looking at rotation. Try to find, if you don't want the ETF, hunt for the outperformers inside of the ETF, and you might find a pretty good winner, right? And last but not least, XLE, the energy sector. Boom, right? Now, this as an energy sector, it's more for the daily trigger. It's already kind of did its thing, had a nice rip. We actually took a trade on XLE, got 98% return on investment. We did not let the runner run because we were switching platforms. Now, if you notice, it broke up here, set resistance up here, and you have a double test or triple test right here. So this is your resistance, right? 3 weeks I've actually come down and tested this level, bounced off of it. So on the daily, I saw this potentially as a buy trigger off the test. Remember, my theory is it can do one of three things, right? It can, from the middle, go up and test the high, or come back down and retest the low. But if you get a daily buy trigger for the next 3 days, I believe it can potentially go up and test high. It has been in a very strong uptrend on the daily chart and the weekly chart, right? And the trend here is looking to go ahead and cross green on our expansion contraction. So short-term trends are looking green. Unbalanced volume is green. You've had a long-term trend that's green with a nice healthy pullback. Resistance is showing support, so there's demand stepping in here. Buyers are stepping in. If they continue, then sellers might get out of the way and release their orders. So, guys, I hope this was helpful. Q, what do you think? Pretty good?
Mm-hmm.
You think we gave them some value?
Mm-hmm.
Nice. If we gave you guys some good value, then I would definitely say reach out to us in the comments or check out one of our previous videos. We love doing these videos, and we actually love the markets. It's one of the coolest, like, non-biased ways to tap into skills and test your disciplines. So definitely like, but make sure you make your trading rules. Like, don't break your trading rules, and just be consistent in building your portfolio, whatever your plan is, whether it's buy and hold or options or day trading, whatever it is. Make sure you stick to your rules, and make sure you don't quit. Don't quit. Or if your job is to get funded, just don't quit. Hit that goal. Okay, so this is your boy MC Fire.
An ice cube.
Thank you guys. Have a good day and goodbye. Peace.